We launched our model portfolios in March of 2023, offering 14 risk-targeted strategies. Since then, they've performed in line with our expectations for the level of risk taken. By offering 14 portfolios, this allows us to align clients with their investment objectives, from low risk for our more cautious client to high risk for the more adventurous client.
At Greystone, we have a specialist investment management team who work full-time on these portfolios. This means they're always monitored with continuous investment research and risk management. Our management of these portfolios is very much a hands-on approach. We make changes to them quarterly, adjusting the underlying assets and the funds that we're using. This means that we're quick to adjust to changing market and economic conditions. Adjusting portfolios regularly in this manner means that we can seize emerging opportunities whilst also protecting against any short-term risks that develop. This means we can deliver targeted growth for our clients.
Each of the 14 portfolios comprises 15 to 30 funds to ensure that we are sufficiently diversified. The funds we select are either passively or actively managed. We use passive funds to harness broad exposure at low costs. We use actively managed funds where we believe there is the opportunity for extra returns over and above that would be provided by the passive equivalent. We have created a number of portfolios which combine varying proportions in equities, bonds, cash, and what we term alternatives. And we've done that in such a way that we can meet differing investor objectives. Equities are essentially a share in a company that is listed, so you have purchased the right to a share of the profits in the form of dividends, things like that, over a period of time. So you're essentially a part owner in a business that is listed on one of the major stock exchanges of the world. Bonds, also known as fixed income, represent a loan to the same sort of companies that I've just talked about, or to the government. Gilts are a pretty famous example of which. So you're lending the government, in that example, money. You'll get that money back at some stated time in the future, and in the interim, you'll receive a coupon or you'll receive interest. Cash is fairly self-explanatory. There is a slight complication. It's not always cash in a bank. It can be cash in the form of very short-term loans too, but effectively cash, or what sometimes is known as money markets, are very short-term loans, act a bit like cash, so very low levels of volatility. The final one is what we call alternatives, and these can be all kinds of things really that don't fall into any of the three brackets that I've already discussed. But ultimately, the way that we operate, alternatives would be shares in gold mining firms or gold producers, or there might be some exposure to gold bullion itself. That's a good example of an alternative that we'll use. And we combine those assets in such a way that we can meet varying investor objectives. Investors that prioritize low variability in portfolio values, for example, will typically see greater proportions of their portfolio invested in cash and fixed income or bonds. Those clients that are prioritizing higher rates of growth will typically see higher levels of equity and what we term alternatives in their portfolio.
We launched our Responsible Future portfolios in October of 2024, offering 5 individual strategies. These individual portfolios to be aligned with responsible investment themes. These themes incorporate a set of responsible goals, ranging from a clear set of exclusions across key controversial areas to limitations as a means of capping exposure to revenue streams in key industries, and finally avoidance, minimising exposure to a non-exhaustive list of broader issues. As part of our commitment to remaining responsibly focused, we engage with our underlying fund managers to identify trends in socially and environmentally impactful areas. Our Responsible Future portfolios maintain similar bond and equity allocations as our standard portfolio range.
Regular communication is a really important feature of our offering. We produce quarterly market and portfolio updates, which keep our investors up to date with performance and any changes we're making. All relevant information is also available via our website for both the standard and the Responsible Future portfolios. And any questions are always welcome via your usual Greystone advisor.